Okay, welcome everyone to the weekly webinar. Here Saturday, Travis and Paul from 24FX giving some chart analysis, website review, and some results of the past month we will show as well and last year, okay? We will get into the website a little bit slowly, and just to show you guys where the direction of the website right now and what we're doing. And this is our website here. We have here how it works, the services. We are giving like 1 or 2 webinars a week, sorry. We have the courses. We are making the blog right now, and we have some basic contacts as well, okay? For example, if you want some more information about our one-on-one courses or buy the library, and also to get access to all the webinars, you just go to the website and, for example, you can have a look. Here, for example, you have the trade alerts, you have the buy the library and one-on-one coaching. If you want to go, for example, for trade alerts, you just place learn more. And here is all the services what we have right now. Those are the trade alerts. We have here the Bio Library, and basically is the 2 courses that we are making, and it looks very, very nice, and it's a lot of knowledge here, okay? One thing also very important is we don't go into the basis of trading. If we need, we can do it, but we just go directly into the system of how to trade. We 24FX right now have 2 systems. One system with medium to short term, shall we say, based on Elliot wave and new wave analysis. Okay, this is a new form to see the market. Very nice explaining, very nice details. As a second system, we have a scalping system. This is less drawdown as well. We don't hold positions overnight, and we just enter to the market and close very, very faster. Average trade on the scalping system is like 20 to 30 seconds. And we use another tools and another platforms, very, very special. If you wanna know more, just keep in contact, subscribe to the channel, and we will get into that. Also, you can, for example, ask for some more information, maybe a quick call with Travis or me, whatsoever, given here, and you can keep in contact with us as well, okay? That's with the website, okay? We appreciate, for example, in the groups, it's the Francis and, well, all those guys here in the Telegram that say, well, they're, highly active, and they are always saying, hey, these things looks good, those things has to be better, and this is always appreciated by Travis and by me, okay, of course. Okay, and with that being said, we just go into the charts, and then we will get and make some, analysis of the trading week as well as in results. Okay, we have here, I choose the Aussie dollar, okay, and this is very simple structure, and I think we will get some more upside in the next week, as well as in the euro or in the pound dollar as well. For example, in our Telegram channel, we have sharing the past analysis. Looks like that on the pound dollar, okay, and we're just waiting for a small correction here to continue to be bullish. At least this move has to have another leg, you know, the C leg. It has to be, we just wait for a correction, maybe 1, 2, 3 days here. It will be not like a trending market, more like you know, a corrective market the next 2, 3 days. Okay, we are just starting November. And here we have the euro. Okay, we just saw the pound dollar here on the daily. Okay, if you want to get some more detail about those analysis and the charts itself, you just, you know, reply in the comments or be in contact with us in the website. We'll give you access to the Telegram channel. Okay, it's completely free. Okay, that's important to say as well. Okay, for now. And well, we just continue with the euro dollar. Okay, at the beginning, if you are not familiar with the Elliot wave and all the stuff, it looks like a very complex and very, you know, sophisticated wave of doing the technical analysis. But yeah, it just start with very small, and you just start, you know, looking at the waves, you know, the most basic concepts, and from there you can start growing. We just given the course as well, but if you have some basic knowledge, you can also learn a lot from our charts and from our webinars, completely free. Okay. Here we have like a impulse in basic technical analysis. We just closing, you know, like this first trend line. Okay, maybe a pullback, and well, we have a retest, and we have also a 1% Fibonacci extension from the wave. Okay, we just finished this leg. The most important here is to know if the market will continue higher or just make a new low here. This is something like we have to wait to see the market some more data and to be sure of that. Right now, the more if we can say, the more clear pattern that we have right now is a correction and a bull momentum for about like 100 or 200 pips, okay, for next week. And we just wanna to have a look here at the Aussie dollar. I want to make this analysis with you guys here, if you don't mind, and maybe you will like it as well. Okay. Well, in our system, we just starting always with an X. You know, we just recognize the maximum of the low of the trend. Just the way to start making an analysis. Okay. Just place like a horizontal line. It can be the resistance level, shall we say, or maybe the starting point of the downtrend in this case, okay? We just call basically 5 waves, you know? First wave, second wave, third wave, fourth wave, and then we have here the 5. Look at that, and you know, an Elliot wave, and it tends to be a little bit complex because it's waves inside of the waves, and it gets growing and growing and growing, and it just never stops. You know, you just never are done with the analysis. But with a clear rules and a basic rules and a simple rules, you can start to make your own analysis as well. Okay. We can, for example, as well unify the X wave with the 4, and we still have like a little bit attempt to break this downtrend. Okay, maybe some more correction to continue to the upside. Okay, we have as well here the second wave. It has to be on the right. Okay, because here is a correction always after the 1 wave, something like that. In the C wave, close or validate the second wave. Okay, we have a 1, 2, 3, 4, 5 in the third wave as well. It's a 5 wave inside the third wave. Okay, something like that. Let's place here another color, you know, just to make a difference between that, and maybe the ABC we just place it like red, you know. then if you look very clear, we just started from nothing and we just get, you know, more detail into that. We can place, for example, here, it's also, this can be a trigger here below the B wave, okay, for more downside, and below the third wave is also a trigger, you know, just breaking the low, you know, and continue lower, okay? As soon as we reach the third wave, we will have a correction. It can be an ABC as well, or ABCD as well. Normally the corrections are with letters and the impulse waves are with numbers, okay? If you already knew that, that's great. If you're not, you're learning something today, and that's the point, you know? Okay. And some guys in the chat, they say that I have very mysterious voice, okay? Hope I am better today and feel more comfortable and be more clear about my explanations. Okay, let's continue here. We can place, for example, a trend line here, okay? And everything is start to make sense, you know? The better things about to Elliot wave and new wave analysis is like, you know, you just be prepared for the next move of the market, and this will be very, very nice to, for example, to have some moving average, to have some support and resistance as well if you use it, and it will be more clear on that, okay? It will act as, for example, as a filter, okay, for your analysis. And, you know, at the beginning, I start, you know, going very, very simple charts, you know, with a trend line or with a support. But you have to understand that the market is very complex and there's millions of transactions every day. And it's more like, you know, one or two lines that we place into the market and in the charts, you know. And then, yeah, it has to be like more complex than that, okay? Okay, just continue with that. It looks like we have the phi wave, okay? And then this phi wave, this is the important level here, okay? This is the way that, or this is the level that we can place our stops and we'll be safe, okay? This is another great point of Elliot wave, because if you place a stop here in this area, the market can correct, but it doesn't change the structure at all. Then it can always move to the upside. For example, if the market comes down here and we just buy and place a stop loss here, the market can retrace, stop us out, and then coming to the upside, okay? This is a very, very classic move in the market, okay? And I'm sure all of us get stop outs someday by those kind of moves, okay? Then this low on this fifth five wave act as a support as well, and then we will place our stops orders below this low, okay? It's about 0.702, okay? The other good point that we are making in 24FX is like we validate each wave with Fibonacci ratios, okay? If you don't validate the waves, you just get confused and you just place your waves in well, in the first move of the market that you see, okay? For example, if you just place 1, 2, 3, 4, 5, 6, and it just go forever, you know, and this is just makes no sense, okay? Then you have to validate each wave in order to be clear in your count, okay? For example, I'm not gonna go, you know, very deeply into that, okay? Because this is part of the course. I'm giving here, you know, some examples here. But if you want to understand more and to get more knowledge about that, you know, just contact us. And well, this is you know, more detailed matter. But basically, we just as we discover the X, okay, that is the maximum point or the minimum point of the trend, the first wave and the second wave, you know, we just place the extension. And as the extension goes, we just go, for example, sorry, here. we just go for a 1.61845 wave. Okay, this is all this area. Okay, it's not exact price, it's the area between the 161 and the 1.8. Okay, and this is like the area of, you know, you can call it like support or supply and demand zone. Well, we just call it like the 5 wave zone. You know, this is very, very important to understand this point, that the market, you know, just can't continue go lower. If it can continue lower, well, of course the market can, but if the market continue lower, the market will react very faster and very quickly to the other side. Okay, then those lows to be short in those lows are very risky. Okay, and this an important thing to know. Take profit or bullish momentum can be about this area, the 38 and the 23. This is a very important area as well. And the market just is trying to get to this area. Above the X wave is just a completely bullish momentum. You know, you just breaking the higher highs from past days. You know. Higher lows, sorry, for past days, and this is a very clear bullish momentum. Okay, as soon as we have here the 5 wave, we just go for an ABC. We have here the A, we are waiting for a B, and we're just going here for the C wave. Just place a retracement here from B, from 5 wave to A, and we just add here the 61A. You know, I just don't have it here right now. And this is a very, very important zone to go bullish, you know. This is the entry zone. Here we have the stop, and we have very clear recognize the take profit, okay? Let's see how it goes. This is a, you know, more education session, okay? We don't want that you enter and risk all your account, you know, in one simple trade, okay? Just if you want to go and trading, you have to be aware that you can lose your money, okay? And this is not like a recommendation or something like that. If you know what you are doing, you just do it for yourself, okay? We are not responsible for that. That's very, very important for that, okay? We are giving some education knowledge. You have to understand as well, if you're new to trading, that it will take you a lot of months, or if not years, to become profitable into the market, okay? There's a lot of noise and a lot of bad advertising that say that you can be millionaire overnight. This is just BS, you know? Okay. And then this is basically what we have here in the Aussie dollar. Hope you enjoy this analysis. And yeah, if you want to be you know, to be under group 3rd or 4th time that I'm saying that you know, just go for our website and just contact us. You know, 24fxacademy.com. And just feel free to chat with us, to send us a message, and we will answer you as soon as possible. Another good thing that I'm going to show you here is results from one of our accounts from this year. You know, there is a lot of academies and there is a lot of traders out there that, you know, they can trade and they can teach how to trade. But just, you know, I think half of that, they really can show you some results, you know, some verified results, and as good as we have, okay? We are very, very glad to have those results. It take us a lot of years, you know. Me personally, I am like 6 years into the trading, okay? And this is the past performance year, or this current year, okay? The most critical point into every single statement of trade statement is not the percent profitable. it's not how much money you make, okay, at least for what we are thinking for, sorry about that, is the maximum decline balance, you know, is the drawdown. This is the critical point, you know, because this guy here is tell you like how much are you risking to get what you have right now, you know. If you're risking 50% of your account and you're getting 100%, this is too much risk placing into your account, you know. It's like almost a flip of a coin, okay. But looking at what we have here, we have 0.09%, okay. This is based on our scalping method, okay. And you know, the Elliot web method, it has something like 10 to 20%. I will show you in the next webinar as well. But this scalping method, it has only less than 1%. That means that if we have, for example, $1,000 account, your account is only risking $10 of this account to get whatever, you know, a 5% or a 10% monthly, you know. And this is just amazing, you know. It's like your best friend say to you, okay, we will gonna start a new business. Let's open a business here, and we will start, you know, investing like $1,000 account in a normal business, okay, and we will have like a $10,000, you know, like 10 times more what you have, okay. We are seeing here, not even 10, we are seeing here 100 times the profitable, how do you say that, you know, the profitable of your risk, okay. We're risking 1%, and this account is already over 100%, okay. This is a small account, okay. It starts with 3K, and right now is almost 4K into profit, okay. This is more than 100%. We just placed it at 100, okay. This is a very, very nice risk reward ratio, if we can call it like that, okay. Also, another point very important is the profit factor, okay. We are risking, we have a strategy that risks, for example, if we can say, for example, 10 pips, and we can go, for example, for 44 pips, okay. This is 44 for 1 profit factor. Very, very important as well, and this will give you a very nice profitable as well, okay. Starting balance, here it is, current balance, parent, okay, all this stuff. And here we have the January, we have the February, we have the March, April, okay, all year long. You look at that, the green months are always much higher and better than the red days, or you know, the red or the wrong positions, okay. And this is almost 1,000 trades, okay. This is also very important, okay. And this is long, short. We have here also the trades that we won is the 82%. This is very, very nice as well. And we are very, very proud of the results, okay. You can say, well, these guys are crazy, but you know, we are very, very, very glad to have those results. And you know, lost trades at only the 18% of the time, you know, and this is very, very important, okay. With that being said, well, the trend line also, well, looks very, very nice. And with that being said, we just finished the webinar, okay. Hope you like, and we will be glad to upload some more videos and to make some webinars as we are doing in the last couple of weeks, okay. Hope you guys a great weekend, and we continue working for this week as well, okay. Then, yeah. Juan, let's have a question. It's not better take the body cancel the state that the week of the drought, the trend line, how much did to retrace to its considered of wave? Okay, thank you, Juan, for your questions. Okay, Juan is making a question that it's not better to take, for example, the body of the candle. Okay, you can do it as well. You can do it, but we have tested that the wicks are also very important because the market is there. Okay, if you are not, it's better, for us. Okay, you can do it all the time. For example, we have here the 1.61. Look, it's very, very exact, this price here. But if we place it, for example, of the bodies of the candles, okay, we just place it like that. Let's see how much it changed. Oh, the 161.8 just go here. You see it? Very basic, very simple, very fast. You just get the point. Oh, it's more exact if we use the wicks of the candles. Okay, you can do, of course, some more analysis and some more tests in this regard. But as much as we are testing, is much better to take in from the wicks. Okay. Hope you joined the webinar. And we hope also you learned something and you are inspired today from us. Have a good rest of the weekend, and see you in the next one. Bye all.